Felix, before you do anything today, would you want to know exactly how I trade, get my whole trading framework as a former investment banker, and get that for free? If the answer to that is yes, come and join me on Tuesday evening, that's New York time, at felixfriendinar.com/webinar. Spend about an hour, hour and a half with me, and I will break it down for you, my entire 3-step system. If you're a beginner, if you're new to this is perfect for you. And it's free. You get my risk management, you get my automation systems, you get the whole thing handed to you on a platter. Why? Because, quite frankly, you deserve some financial education. We all do. I didn't get any, but I was lucky. I got the right job that taught me something. Not everybody is that lucky. So that's really our way here of growing this community and helping tens of thousands of people get to financial freedom. See you on Tuesday. felixfriendinar.com/webinar. Every weekend, I sit down and I go through the week's data points, the week's news. I read a bunch of threads. I follow a lot of people on Twitter, some hedge fund guys, and I talk to our coaching team, of which 3 are former market makers. We've got guys who've managed $20 billion hedge funds and so on. And I try to get a feeling, what's the theme? Where are we? What's the pulse? And sort of apply a little bit my banking experience and all that knowledge, and then I condense it into the plan for the coming week. And my entire goal here is to do that and share that with you in the next 10 minutes or so you don't have to do the work, but you still get the same benefit of being the best informed investor out there, so you can make more money, you can make better decisions. And I'll do one better. I'll teach you even how I actually trade. I give you the 3 rules, the automations, the whole system completely for free. All you got to do is join me on Tuesday evening, that's New York time, at felixfriendinar.com/webinar, and grab yourself a free ticket. I think it's 5 p.m. Eastern time, if I'm not mistaken. Check it out, felixfriendinar.com/webinar. So I've made some notes. I've read a bunch of things. Let me walk you through what's actually happening here, what the positioning is. Let's talk about the banking crisis. Let's talk about the AI trade, not the one you're thinking about, but a better one. We'll talk about inflation and then all the key dates for the week. Does that sound fair enough? For some reason, when I'm in the south of France, I have to drink pineapple juice. I don't know why, it's just a thing. Alrighty, so let's look at the outlook here first. And I've got some notes on here. It's faster and easier. And I'll try to put some out on the screen as well for you. So we've had the lightest trading days of the year, which means very little volume. It means either everyone's flown to the south of France with me, or everyone's just like, there isn't really a direction and we're waiting for inflation data next week. We've had a really good run. Why don't we just wait and see? And I think that's a little bit the way that's looking. Goldman Sachs, however, are telling us, guys, it's amazing. Everything looks wonderful. Why? Because big companies are buying their own shares. The algo funds are buying, the CTAs, the asset managers are buying, and hedge funds are buying, more or less. At least they're not selling. So that's pretty good, right? So we've got the longest winning streak of the Dow Jones in, I don't know since when, last year for sure. It's like a really, really long time. We've got Amazon doing pretty well. Bezos, richest man in the world again. And the fear index is at the lowest level, I think, since 2015. If you open a VIX chart, I'll try to put one on this chart screen here for you. It's just super low. What does that mean? No one's scared. No one's scared of the big bad wolf, Jerome Powell. We think he's flying around Wall Street on some sort of great big white dove. And I'll explain to you why the market's thinking that, and what we've already priced in or what we haven't priced in. Now, according to Goldman Sachs, the global growth is going to improve this year. Inflation is globally going to come down this year. So everything is pretty freaking good, right? And then you get companies reporting earnings beat after earnings beat, profit after profit beat, and which is of course the same thing. Earnings is the fancy word for profit to make bankers sound smarter. And we're expecting profits to significantly go up later in the year. And well, we've basically priced in slightly worse inflation than the Fed's telling us we're going to get. And that means the market's actually cautious. And any surprise to the contrary, so lower inflation, will mean, woo, get the party hats out. So that's all brilliant. Now, what about, there must be something in here that's not quite as glorious as that. Well, yeah, there is the banking crisis. And the banking crisis is a small and regional banking crisis. And if you listen to the Starwood Capital Group's founder, a chap called Barry Sternlicht, and he says, I think regional banks are going to fail every day or every week or maybe 2 a week. And that's like, whoa, okay, this guy is in commercial real estate, so maybe he's got an inside track here. He believes that out of the 3 trillion commercial real estate space, imagine, he's a commercial real estate guy, 1.2 trillion are just hot air. The kind of like, oh, I thought it was worth more, so I inflated the numbers kind of type thing. Trump, which, by the way, I think is not criminal. I think that's just normal practice in commercial real estate. But that's a conversation we're going to get some angry comments about from the Democrats viewing. But I haven't got I really couldn't care who you guys elect. It's just entertaining as an outsider. Honestly, very entertaining. You've got 350 million people, and the 2 people you pick is one guy who's so old you barely remember his name, and another guy who's so covered in fake tan you can barely tell him apart from an orange background. It's very, very odd the way that system's run, but that's a different story. But yeah, he's basically saying lots of small banks, and we're talking really small banks, like 10 billion and less in market cap and assets, are going to fail. Maybe a couple of bigger ones. There'll be lots of bank mergers. There'll be lots of like forced takeovers and quite a few more bailouts coming. Do I think that's going to tank the market? Honestly, no. I honestly think it's going to be positive, because the market is going to look at it and go, Fed's got to cut now. We've got 5 more banks that just failed. The Fed now has no choice. So I think when you see the headlines, bank failure, obviously be prepared. I wouldn't have my money in a small and regional bank. I would keep my money in JP Morgan Chase, Chase Manhattan, which is what I do, because they're not going to fail. They're never going to fail. I mean, they might fail, but they're going to get bailed out by the taxpayer. So yeah, the regional banking thing is madness, but it could be a good thing for us this year. So cheers to that. Now, our AI trade, I did a video on that probably a couple of weeks back, where I basically walked you through that the key beneficiary from AI is electricity, and we need a lot more power. We need infrastructure, we need more power plants, we need the whole sector, and that I'm very bullish on it. Now it's up about 30%, I think, since we put out that video, and I think it's going to go up some more. So I just thought I'd give you a little bit of an update on that, and I might actually do a further deep dive into that topic in the next few days if you're interested. So let me know down below in the comments. Our gold trade that we put out on our newsletter about 10 days ago, gold's up about 10% since we put that out. I think that was a rather good tip. Why was that a good tip? Well, it's of course never financial advice. We just explain it. But the chap who comes up with that was a market maker on the London Metal Exchange. Metal, gold. You get the idea, right? The man's is a metal expert. The man's done that 20 years of his life. He did that with a lot of money. He made the market. So we got some pretty good insight there. So again, you might want to read that newsletter. Next story, inflation. And I'll give you the key dates here in just a moment. And inflation coming out this week, I want to say Wednesday. Is it Wednesday? Let me just see. Yeah, on Wednesday, 8:30. And what do I expect with that? Well, I expect it to come in lower. I expect owner's rent inflation to come in lower. And that is a complete fabrication, that number anyway. So basically the way they come up with owner's rent, which is a pretty big chunk of inflation. They ask a bunch of people who own a home, and they say, you are in this home, you own it, wonderful. how much do you think you pay in rent to live in your home? And you say, oh, I don't know, $5,000 or whatever it might be. You come up with some number that you think your house is worth, because you think your house is worth a lot, because, you painted it a certain shade of something and filled it with stuffed animals or garden gnomes or whatever you might be into. And therefore you think this house is very special. And then they come back the next month and they ask you the same question. So it's like the most moronic way of collecting rent information. You could just actually collect the data on rents that people actually pay, but no, they don't do that. So that's one of the ways that they look at housing market. And that data, therefore, is complete bollocks. And it tends to lag real rents by about 18 months. Why? Because it's about psychology. It's about how do I feel about the economy. If I feel the economy is terrible, then I probably will say people are going to pay less rent to live here. Whereas if I think everything is wonderful, how can I come up with a higher number? And the consumer tends not to realize what's actually happening until much, much later. So massive lag coming in there. But to make a long story short, this particular measure of the housing market, if you can call it a measure, this fabrication of nonsense is likely to come in much lower, because it's been ludicrously high, and it tends to, as I say, do these sort of swings and roundabouts over time. So I think that'd be good, and I think the market's going to love it. So I think Goldilocks is here, and I think the market's going to do wonderfully. Now, does that mean we should put everything on green? No, never. We always aim to be market neutral. We never aim to be like, oh, let's put everything on that and hope we're right, because you do that, you're going to lose money. The most important thing as an investor and as a trader is to not lose money, right? Come and join me on Tuesday. I'll teach you exactly how we do that. So that's the inflation story. Now, key dates for the week, and I note these down. I'm going to give you only the big ones. So on Tuesday, we're getting PPI, producer price inflation. That is manufacturing inflation. So how much more is it costing someone who's making this remote to produce that this month compared to last month, right? That's what they're asking them for, and they're obviously looking at input prices, electricity prices, imports, components, labor. That's PPI. Now, why is that important? Because, well, 3 months after this is made, I might go out on Amazon and I might order it, and if it costs an extra 50 cents, that's inflation to me as the consumer. So it's a leading indicator, PPI. We get very lucky on Tuesday also. Jerome Powell, the Magnificent, also speaks that day, and that is always a momentous occasion for the market. So Tuesday is a big deal. On Wednesday, we get inflation data out, real inflation data out, the consumer inflation data out. That's obviously super important. And we also get retail sales out, and we want to see how's that going. How's the consumer feeling? Have they still got money left on those credit card balances, or is it now buy now, pay later, or whatever the latest disaster of indebtedness is? And therefore, that'll be important for Nike and Macy's and Lululemon and Apple and Amazon and anybody else who's selling things to the consumer. And that also affects advertising spend. So your Meta and your Google now matter, right? So it's a really important indicator of recessionary fears. And that's basically it. Well, we have a bunch of other Fed speeches. I'm not going to tell you all of them. The boy band of Fed presidents is on tour yet once again, and they typically try to undo the damage that Jerome has done a few days prior. If Jerome comes out all positive and bullish and lovely, and I love you all, my children, the market, let the market go up, then they will usually come in and they try to sort of calm the whole thing down again a little bit. So you see these zigzags in the market. The Fed actually causes quite a lot of them, and we can make money out of them because a lot of this is actually very predictable. And once you see the structure, once you understand the system and the way it's set up, you kind of see through it and you go, that's an opportunity, that's an opportunity, that's an opportunity. Actually, everything is an opportunity. The market crashes, you've never seen me happy. The market rallies, I'm super happy, right? So I want you to get to that place where you just see financial markets as an endless opportunity every single day. Come and join me on Tuesday, felixfriendinar.com/webinar. I teach you my 3-step system, the whole thing completely for free. You get the rules, you see me do the automations, we'll do an actual live trade together after I've given you the whole structure of it, and you don't need to know anything for it. You can be a complete beginner, you could have never had a brokerage account in your life, and you should still be able to follow along. And I love you for joining. I love you for watching. We are going to have a rather beautiful day here, I think, judging by the color of the sky and the sea behind me. And I wish you the same. Felix there. Every Saturday morning, I sit down for about 3 hours and I go through the market and I do all the kind of analysis and deep dive into your favorite tech stocks that I used to do as a banker. And I do that so you don't have to. And then I distill it into this video to tell you what is likely to happen